It is Tuesday, April 15th. Right now it's 11:55 p.m. Pacific time. So the Asian session is coming to a close, and I just want to share two trades that I took today in the Asian session. So the first one is in gold. I bought the breakout today as it broke above 32.30 around this price. So let me go to the 1 hour chart. I was buying this after it broke out of the top here that was formed at the end of last week. And yeah, this was such a big move last week. I originally was not going to buy this because it has not consolidated for long enough just now. But after seeing this breakout, I was taking a small position at first, about 1%. And then I put on a second position towards the middle of the Asian session. And the reason for that was here I bought a little bit too early. I bought at the very high and I had to wait for the retracement here. But I didn't sell. I kept this position to see if it would consolidate above this breakout level, and it did. So throughout the Asian session, we formed a rising triangle here. So the second position that I bought, I felt much better about this entry. And the reason for that was I had a better, tighter consolidation in which to put my stop loss. So the first position I entered, I could only put my stop loss at about just a little bit below the breakout level, which was 32.23. But after seeing this breakout and then retracement on the 5-minute time frame, I was able to put the second stop loss at 32.47. So yeah, this was a better entry than the first one, like I said. And then afterwards, I saw this retracement here, but then I was looking just at a simple rising trend line here, and it did end up bouncing on here quite sharply. So I also did not exit here, and I've been holding since then. So it looks like it could continue the breakout as we go into the London session open. I thought it was going to break out here, just maybe 20 minutes ago, but it's still holding at this level, and looks like it's making a second attempt at 3300 right now. So if this breakout continues after London opens, I think I can trail my stop losses to break even at around 32.82. So this would be the low here on the 5-minute chart. So yeah, overall, I'd say this is an okay entry. It might look a little bit overextended on the 1 hour chart right now, but just looking at the candles, it's had several opportunities to retrace, but it never really got back to the breakout level. In fact, I'm seeing these small candles, these doji candles, and it's still going up. It doesn't mean it will sell back, but the Kumo is gradually gaining thickness on the 1 hour chart. So the 4 hour chart, it's likely there could be more room for this to run. So if we look at the past here, there was a huge breakout. This was one leg. So if it continues to break out, this next leg should match approximately the length of this leg. And this is a bounce on the 4 hour Tenkan-sen. So unless it comes back to retest the Tenkan-sen, I think I'm gonna try and hold this trade. And then yeah, so what made me interested in this trade was the weekly chart. So let me explain this buy in the context of last week's candle. So the week prior to that, we had a retracement to the weekly Tenkan-sen. And then last week's candle, not only was it a huge bullish candle, but it completely engulfed the previous week's candle and closed towards the high. So there's a concept called last daily range or daily close. So when it closes towards the high of the previous session, it means that the buyers were willing to hold this trade into the weekend. So normally, everything being equal, the game theory optimal way would be to close trades, or at least take some of your profits, because there's 2 days when the market doesn't trade, and you never know if it may gap against you when it opens. So everything being 50-50, that's what people would tend to do or to think of. But in cases where you see it close at the high, this doesn't have to be a weekly candle, it can be a daily or any session, but typically when a candle closes towards the high, that means there is quite a bit of confidence that the move will continue. So given the context of the weekly candle, I looked at the daily chart this week. So this was Friday's candle close. Monday, there was not really a reaction towards it. We had a doji candle. Tuesday, we had no action. So if I were just to assume a horizontal trading range, let's say starting at 2980 and the high being 3250, if the market was going sideways, there would probably be more sellers, or at least more selling action to try and bring it back to one of these Hane lines. But that didn't happen. So for 2 days, the market did not react to this high level, supposedly high level price. And then today was the daily breakout candle, which I showed how that happened in the mid time frames. So that's a little bit why this breakout, I was willing to take this trade. So yeah, now it's continuing. We're nearing 32.96 into the London Open. So this move is continuing higher. So yeah, that's gold. And then at the same time, I took a trade in USDJPY. So this one, I'll start at the weekly chart first. So this one is starting to form somewhat of a head and shoulders pattern. This right shoulder is a bit large, but also if you look clearly, this right shoulder is also a head and shoulders pattern on the daily chart. So normally I would not sell into this maybe support zone here at 140, but I am following the mid time frames. So looking at the daily chart, there was a lot of action last week with all the announcements. So technically how that unfolded was a lot of the buyers came in to defend let's say the 145 to 140 level. They came in early and they tried to defend this for almost a week, we'll say 4 or 5 days. But on Thursday, that buying pressure was overcome by a huge selling action. Now, how did this happen on the 4-hour chart? So we had, this was news driven, so that's why it's such a large spike in a short time. But even with these very positive volatility, we can see that the selling action brought it to new lows every time. So ever since Thursday, it's been trading in this kind of wedge pattern. And then in today's Asian session, I saw it test the lower support line of this wedge. And then I decided to sell around on this candle here. So I was checking the 1-hour chart. So it interacted with this support for 1, 2, 3 candles, and on this third candle it closed below the line. So based on that, I sold exactly right here at 142.62, and it has been selling off. Let me just see what was the exact time that I sold. I sold at 8:38 p.m. So going down further into the 2-minute chart, that was exactly here as it broke out. yeah, I was starting to think if I should take the sell signal seriously at around maybe 1950, and then I was watching it for about half an hour, and then yeah, you could see these small bounces, and then finally broke through, and I just waited maybe one or two more candles for confirmation, and now it's been selling off. So it sold off initially, came back and retested. By the way, I learned this is called the ice line. So whenever you see a line that separates support, and then when it breaks through, it becomes resistance. Some people call this the ice line. So it rebounded very weakly, I would say, retested, sold off again, and now we're forming another rebound, and we'll see if this continues to penetrate. So overall, I took, let's see, I took 1.7% risk on gold, and then I took another 1% risk on USDJPY. Now, I only took 1% on the second trade was because I was short the dollar already by buying gold. So I didn't want to have both of these two trades too correlated. So I reduced the second position to just 1%. So yeah, that's a total of 2.7% open risk on both of these trades, but I can cut that down. At least I can cut down the one on gold to break even. So that would just leave 1% of open risk overnight if I choose to hold these positions. Anyway, yeah, the dollar index, it is selling off a little bit, I think. So yeah, this is the overall dollar index. Last week we penetrated these lows here, and then this week we can say is about half over and still not much of an answer to try and push the price back above this support line. So there is some news tomorrow. I think there is retail sales news in the morning, and then some comments by Fed Chair Powell at 10:30. So there could be some action around those events. But overall, yeah, there's not any reaction to last week's selling so far. I was also thinking to sell dollar Swiss franc. So Swiss franc in the long term is much weaker than the yen. But yeah, so this bit of consolidation in the yen is showing up in dollar Swiss franc as well. We haven't sold off below the lows here, but if it does continue to sell off, this would complete a double top pattern here. So yeah, the daily chart, it's trending, but right now the price is a bit far from the Kijun Sen. 4-hour chart, it is trending, but Kijun Sen is not pointing down as much just yet. It's pointing down a little bit because some of these candles are timing out on the calculation. By the way, when it leaves the Wednesday candle, it'll probably go down a lot, even if the price doesn't break out. So let's see, this is 26 bars right now. So yeah, in another, on the next 4-hour candle, this will go down, even if the price does not form a new low. And then yeah, 1-hour chart, it's completely flat, but this is a good period of consolidation, almost as much as the previous one towards the beginning of the month. So if dollar Swiss franc breaks down, this would be a pretty good setup to trade. Some pretty clean support levels on the mid time frame charts. Okay, so yeah, gold, it's still doing well. I'll watch it a little bit longer going into the London session, but yeah, I think I should be able to trail it to break even before bed.